Hey everyone, let's break down what's been going on in the markets in the last week and check out what will happen this week. Let's start in China, where manufacturing picked up steam, hitting its fastest pace in 5 months thanks to a spike in new orders. Over in the Eurozone, the economy did grow, but barely. Manufacturing's showing signs of life, but the services sector still dragging its feet. Retail sales down 0.5% in July. Not great, especially with US tariffs in play. Inflation in the euro area ticked up slightly. We are now at 2.1%, and Germany's growth forecast just got slashed again. Tough times for Europe's biggest economy. Japan had a bit of a mixed week. Good news, real wages finally turned positive. Bad news, factory output dropped and service sector growth is slowing. Plus, companies cut staff for the first time in almost 2 years. In Australia, we got a surprise. GDP grew 1.8% year over year, the fastest since late 2023. Malaysia held its rate steady at 2.75%, and Switzerland saw prices dip slightly with deflation of 0.1%. In the US, President Trump signed an executive order cutting tariffs on Japanese cars from 27.5% down to 15%. Meanwhile, the labor market is slowing. Jobless claims are up and job openings slipped to 7.2 million. Canada's trade deficit narrowed a bit thanks to recovering exports, but overall, trade still weak. India made a big move too, simplifying its GST system to just 2 rates, 5% and 18%. The goal? Boost domestic consumption. And finally, in Japan, bond yields are flying. The 30-year yield jumped past 3.28%, the highest since the 90s. Now let's check the top movers. Now on to this week. There's a few things to keep an eye on. China's trade data, US inflation numbers, the ECB's rate decision, and that French confidence vote, which could shake things up. Big names reporting earnings include Oracle, GameStop, and Adobe. Now that's a wrap for this week's market check-in. We'll be back soon with more updates, so stay sharp, stay informed, and as always, trade smart.